Happy New Year and welcome to Woods of Stardon. This is CH. This video provides a quick 2025 performance summary of the funds and ETFs I covered previously, specifically on the US dollar share classes for US dollar investors. Please refer to the other similar video if you are looking for a Sing dollar version. I will be using Morningstar charts to compare the funds in different asset class categories, looking at total return for the calendar year. I'll also be using retail share classes for the mutual funds that are most commonly offered by local distributors. Do refer to fund-specific videos if you are interested to find out more about any funds covered here. Some quick disclaimers before we start. In this video, we are looking at performance of the funds for the past year of 2025. That should not be used to assume that future performance will be similar. We are also looking at only a short 1-year track record that can be very different from the long-term average performance. Do bear this in mind. For those of you who haven't seen my usual fund-specific videos, here is a quick guide on how I normally present the Morningstar performance charts. In short, the best performing fund is the top item in the list at the right side, which is color-coded to match the lines in the chart, and the ISIN or identifier plus performance number in the chart legend. Equity markets had a fantastic 2025, with MSCI World using IWDA up over 21% in US dollar terms. Bearing in mind the long-term average annual return is about 8 to 9% only. While there was a lot of news and focus on US markets, it was actually a weaker performer compared to Europe and emerging markets. Singapore markets using ES3 Straits Times Index in US dollar terms was one of the best performers at over 35%. I covered quite a number of global equity funds, but none of the active funds managed to outperform IWDA. Capital Group New Perspective was the closest, while JP Morgan Global Select Equity lagged behind the most. Global income-focused equity funds, on the other hand, had mixed results, as each active manager adopted different approaches and exposures through the year. Allspring Global Equity Enhanced Income and Allianz Global High Payout managed to outperform IWDA decently. Fidelity Global Dividend had a good first half of the year, but underperformed thereafter, ending the year about the same as IWDA. BlackRock Systematic Global Equity High Income lagged behind the most. Given US markets was relatively weaker than the rest, going for global ex-US exposure had been a great play in 2025. DFIV outperformed IWDA significantly by about 24%. I covered a few active ETFs running different US equity strategies. GRNY managed to outperform SPYL decently, though with higher volatility. Between the two iShares ETFs, DYNF had done better, showing factor investing had worked out more effectively than thematic investing in 2025. Income-focused strategies in the US markets didn't work out so well performance-wise. All the active ETFs and active funds underperformed SPYL, with Neuberger Berman US Equity Premium being the weakest. Small caps solutions generated very different results. US small caps funds underperformed, while global ex-US small caps using AVDV showed significant outperformance, with over 28% above IWDA. Emerging markets had done decent, though I only managed to cover the passive tracker from Amundi in this category. Asia equity funds were mixed. Allianz Oriental Income delivered the same as CEMA, while FSSA Asian Equity Plus underperformed substantially. Through the performance gap between YLU and COI, we can also see that financial sector had strongly outperformed REITs, especially in the fourth quarter of the year. Japan equities had a decent year as well, though it was a bit of a challenge for active managers, as we see Amova Japan Dividend Equity underperform CJPU in Q2 but then caught up thereafter and managed to outperform in the last 2 months. India had an uninspiring year, and it was worse for Goldman Sachs India Equity that had underperformed NDIA quite a bit. Singapore markets was one of the best performers as mentioned earlier. Amova Singapore Dividend Equity did not manage to outperform ES3 in US dollar terms though. Technology sector and AI theme were the most popular topics of 2025. WTEC, however, had gone through quite a lot of volatility and only managed to slightly outperform IWDA. Infrastructure and utilities play was something I found potentially interesting for defensive investors. FTGF Clearbridge has two solutions with very different results, and the global infrastructure income was clearly a better performer, that alongside with XDWU managed to outperform IWDA slightly. Nuclear energy using NLR was also something I thought was much more viable than the overhyped renewable energy theme, and that proved right in 2025, with about 35% outperformance versus IWDA even after a big correction in Q4. Resources theme was also something worth looking at, with the increasing trade wars and geopolitical tensions. 91 GSF Global Natural Resources nicely outperformed IWDA by about 22%. Healthcare theme was something I thought had potential, as I expected significant changes in the sector under the new Trump administration. The changes took quite long to take effect though, as exhibited by AB International Healthcare that corrected till August, then rebounded decently. Defense theme is another hot topic with increasing geopolitical tensions, and is more easily played via ETFs instead of mutual funds. DFNS ended the year with a staggering 48% outperformance on top of IWDA, and is the best performing equity fund I covered in 2025. 2025 was a year when the bond markets also delivered decent returns together with equity markets. Global aggregate bonds using AGGG delivered over 8%, that was notably higher than long-term annual returns of around 3 to 4%. HYLD was the best performer, as expected given high-yield bonds are highly correlated to equities. ASIG was weaker than CORP, as most Asia markets trimmed their interest rates ahead of US. Global diversified bond funds showed high correlations, though PIMCO GIS income emerged as the winner again for the year with over 9.5%. HSBC GIF Ultra Short Duration Bond, on the other hand, delivered only about half of the returns, but with minimal volatility that might be suitable for risk-averse investors. While HYLD had a strong performance, Allianz US High Yield lagged behind significantly. For the COCO exposures, both PIMCO Capital Securities and Algebris Financial Credit underperformed AT1. Asia bond markets were relatively weaker, though BlackRock Asian Tiger Bond managed to outperform ASIG. For the Sing dollar focused Asian bond solutions, all of them underperformed ASIG, but had clearly lower volatility through the year with generally lower duration portfolios. Fullerton short-term interest rate was the best performer among them. Many multi-asset funds do not set a benchmark or performance target, claiming their portfolios are dynamic and therefore have no suitable benchmarks. I find this quite rubbish, as I believe investors need to compare the funds with a benchmark to figure out if the funds are doing good or bad. The easiest way is to use, for example, IWDA and AGGG to create a mix of high-level equity versus bond asset allocations, where then we can compare the performance against the funds. I covered quite a number of global multi-asset funds in 2025. Performance-wise, we can see that United CIO Income delivered about 15%, similar to a 50-50 mix of IWDA and AGGG. Lion Global All Seasons Growth was the best performer, with PIMCO Balanced Income and Growth closely behind, both with over 20%. That was notably better than a 80% IWDA plus 20% AGGG mix, even though both funds did not have that much equity exposures in their portfolios. This shows that both funds had done well in their asset allocation decisions and probably as well as the underlying securities selection through the year. The rest of the funds delivered pretty weak returns. US multi-asset funds were milder in returns, as both broad US equities and broad US bonds markets were weaker than the global equivalents. Among the funds covered, Capital Group American Balance had the best performance, while Allianz Income and Growth had the worst. That's all for this 2025 performance summary video for US dollar investors, and I will aim to cover funds in more asset classes this year. Thanks for watching till the end, and I hope this video and my channel will help in your investment journey. May we all grow wiser and prosper.